Welcome back, everybody. Sive Morten is here with the Forex Peace Army.com. Let's take a look again on the Forex market, as usual on the euro currency and slightly on the Great British Pound, and trying to find some reason in the recent mess. So what actually is going on and what we could expect in the nearest time. So the one thing that we could say definitely is the recent collapse is mostly based on the dollar strength, and this is definitely demand for the safe haven assets. Because you could see simultaneously rising of the United States Treasury yields, rising of the dollar, and rising of the gold. Usually, in a normal situation, they move in the opposite direction. But when both are rising, as a dollar as a gold, it always means that recent collapse on other currencies stands due to the demand for the safe haven. Usually, such a performance is very unstable because very often just reaction on some news. This is first moment. Second moment, if we even take into consideration this recent collapse, we can't say that something really bad has happened already. Take a look. In general, market stands in the same range. No significant downside breakout has happened. Yes, we've got this nasty candle recently that has destroyed short-term intraday trading plan that we have prepared, but here we also see the positive side because we just haven't got any loss, and as we haven't taken position based on this particular trading plan that we have created, this drop has happened before we prepared our video, or in the moment where we're preparing this video. So, and currently we actually freely could take a look at the situation that's developing and make a reasonable decision. So if everything stands as it is, take a look at market in general stands in a tight range, forming even some kind of the triangle consolidation, which might be the positive sign, might be the bullish background with falling upward continuation later. So that's the thing that we need to keep an eye on. Also, the grabber that we discussed recently has been formed, and we've got it. Currently, market we need to see that market stands above its lows to keep it valid. The same grabber you could see on the dollar index. So if you take a look at the dollar index, very similar performance. This grabber has been formed, it's pulled back. So from that standpoint, nothing is clear yet. So we can't say that everything is lost and market turns to bearish action, prepare for collapse, and we should go to the downside. Not necessary. But at the same time, some worries that stands around the situation exist. Mostly, if you take a look at the performance on Great British Pound. Yes, United Kingdom currency currently is absolutely different story. They have very specific financial data background, very poor concerning the debt, concerning the budget deficit, forecast of the revenues of the budget, very high interest rates, very high inflation, dropping of the employment, and so on. So the situation there stands really difficult. So partially we take a look at it in our Telegram channel, providing yesterday, for example, interesting charts about the situation in Great Britain. So their cable could react, or better to say, overreacting on the same issues or the same driving factors that push the market down. But at the same time, we just can't ignore it. So if you take a look on our hand shoulders patch and take a look what has happened. So that definitely inability of the market to complete and go with the hand shoulders patch. First of all, what's actually it's clear signs. Very gradual action. We do not see acceleration, which should happen on the hand shoulders patch, especially on the final part where the bulls should control the market. First breakout of the triangle was great, but now you can see market totally collapsed. So that could lead us to treat it as a failure. Yes, market right now stands at the 618 support, and we have got this triple to buy pattern. That might be great. In general, it's not far from the bottom of the left arm, and some chance exists that maybe it will turn up. But we should understand that this is not natural performance for the bullish market, especially if we take a look at this acceleration. This acceleration is absolutely irrational for a bullish reversal pattern in the points where we should get the upward continuation. That's the first moment. Take a look on the daily chart. There's the same. This collapse actually erased all grabbers that has been formed previously to the bullish side. Market dropped. So if our suggestion will be correct and indeed we're getting the failure of these hand shorts and collapse on the market, it means that we're going to the 130 area on the Great British Pound. That might be really big action. Hardly your currency will remain untouched with this performance, because mostly it will be based on the performance of the dollar. So it means that on the Great British Pound, here we have to keep a close eye on what will happen around 133. If you will see that market is start dropping, accelerating down below the 133, that's becoming the primary scenario for the cable. On the euro currency, it also could trigger not pleasant thing. In this case, we'll probably drop out of this consolidation, and it also might trigger significantly down deep retracement, so below 113 area, 114 area. But that's a potential risk, so we just point you what particular levels you have to keep an eye on to understand what's going on, to react properly on these possible scenarios. It doesn't necessarily mean that this definitely will happen. So on the full time frame chart in euro currency, what we have, as we said, even with this collapse, nothing really awful has happened. So even our butterfly that we discussed still stands valid. It will be destroyed only if market drop below the 115.70 lows, because this is the validation point of this butterfly. It means that currently here we probably could carefully take a look at some bullish signs in the hope that maybe this was just short-term reaction. As I said, sometimes it's very short-lived. So if we will see some bullish reversal, bullish performance here, then we accurately could try to take position here. But today I would wait a bit and see what will happen, because momentum was rather strong. On the hourly chart, I'm not excluding the situation where it might be some kind of the butterfly pattern to be formed. So if it will really be the case, that might be great, just because we could use as a butterfly, as later it might turn to some hand shorts pattern, which is also might be used for position taking from the one point of view. From second point of view, or better not the second, just another issue here, is that appearing of the clear patterns makes our life significantly easier, and we'll get more confidence that at least we have some background for a taking position. For now, as a really volatility stands too high, market still stands in some uncertainty. You could say nervous after recent collapse. In the current situation, I think that maybe it's better to not hurry up with the decision making, not hurry up with the position taking right now. So that into what we have currently. Market, I would say that is the bottom line. I would say the market stands at the point where some kind of the vital, the critical point where the short-term bullish scenario stands at the edge. But the downside drop, first we will get deeper retracement down with a larger scale retracement on the weekly chart, on the daily chart as well. Currently, market is still trying to hold this short-term bullish context, because it keeps the butterfly and stands in general in the range. So while it still stands here, everything still could normalize and return back to the normal. So, but we need to be sure with that, because this is our money. We do not want to risk too much. And from that standpoint of view, I think that let's better wait a bit and see what will happen.